All know me. I'm the state's NFIP coordinator. My name's Steve Samuelson, and many of you have called me with questions about flood insurance before. But the guy I go to with my questions is Chris Parsons. So he's the real expert. And he's going to teach us a little class today about the Flood Insurance Claims Handbook, which is a nice little handbook. Some of you just got it in an email from me a short while ago that tells you how to file a flood insurance claim. But what I'm hoping for is that if you ever have a flood in your community and one of your citizens comes up to you and says, "Hey, I got flooded, what do I do next?" that you will have some answers for them based off what you learned in this class today. And take it away, Chris.
All right. Well, thank you, Steve. Hopefully you got the PowerPoint as well. There are some links that we'll be going through, and rather than having to write them down or bookmark them and that kind of thing, just go back to the PDF file, and those links should be in there. So hopefully you can just focus on the material today, and feel free to take notes if you like. I'm going to go ahead and start sharing my screen. And we'll jump right into the presentation. I do have quite a few slides here, and we do only have an hour. So, and I don't think I'm going to be able to see the chat. So I would ask Steve, if you or Cheyenne, if you're staying on, if somebody has a question, feel free to just write it in the chat or raise your hand, and if somebody could let me know. Pretty informal here. I don't mind being interrupted. So if after a slide you do have a question, just go ahead and ask it, and we can address it then. So just real quick, can everyone see the start of the presentation? Can just one person tell me?
Yes.
Okay. Well, great. Yeah, like Steve was talking about, the focus of this session is going to be on claims, It's pretty straightforward compared to property and casualty, but there are some subtle differences or some different people involved that do add a level of complexity that can be kind of confusing. So we'll go through that and talk about that today. So just to go through these first few slides, there's a bunch of resources that I wanted to make everybody aware of. You're probably aware of the flood insurance manual. And there's a link there to that. But this is kind of the main thing for both underwriting and claims. It also has the policy jackets, which outline all the details on what's covered, what's not covered, and the claims process. So I always recommend people downloading that and just kind of having it handy on your desktop or in a folder somewhere. It is updated every April and October, so twice a year. There haven't been very many significant changes, but they have made it easier to read in recent times. So, and then the rates and some of the CRS discounts and things like that are also updated. So I always encourage, even if you have an old manual, to download the most recent one and use that for your reference. So a lot of the information that we're going to talk about today comes from the claims manual. And this is, all of this information is a little bit easier to read than the policy jackets. And it's sorted out, it's mostly for adjusters and insurance agents. And so really the best way that I've found to use it is to use keyword searches on it. And so if you just do a Control F or a find on your with Adobe Acrobat, you can find almost anything that you're looking for related to claims. So I highly encourage downloading that one as well and keeping that for reference. So you probably are aware of the FEMA webpage. So I won't talk too much about that, but it has been updated, and there are some new features and new downloads. There's also floodsmart.gov, and this is a main site that we refer constituents or citizens to when they have questions about flood insurance. There's all sorts of things there about flood insurance, how to buy it, how to find an agent, the cost involved. There's a neat little tool out there that can show them the cost of flooding in the event that they have a flood in the number of inches of water that they receive in their property. So it's kind of fun. There's also some kids games out there and things like that to do. For insurance agents, if they're looking for any kind of marketing materials or have questions on how to become an agent that sells flood insurance, this is the website that we refer them to on that. And then you're probably familiar with this, or maybe you're not. I know Kansas has their own map service center where you get most of your information, but FEMA does have their own as well. There's a lot of historical information out there that you can find. And then also you can use it as kind of a second reference if you can't find something on the Kansas one or you disagree. And I don't know if Kansas has all of them on there, but this is comprehensive as well for the nation as well as the state. So then I wanted to mention the Office of the Flood Insurance Advocate. This is somewhat similar to filing a congressional complaint or something like that. But if you have a constituent that does have a major problem related to the NFIP or flood insurance policy or a claim, they have the opportunity to reach out to the Flood Insurance Advocate. And this is just a group of people at FEMA that kind of do an in-depth review of different situations, any situation actually. And so feel free to refer people to that if it's something that maybe they're not getting a response from their adjuster or they have a major complaint about the program or something like that. But it's a resource for all of us that deal with the NFIP to use. So you may have heard of Risk Rating 2.0 or Equity in Action or NFIP transformation. The NFIP does plan to go through a major change in the upcoming months where they're going to completely revise the way policies are rated. And so this is going to take place for new policies and new business on October 1st, 2021. And then for existing policies, it goes into effect April 1st, 2022. And we will have opportunities for training classes, and I'm sure Steve and Cheyenne with Kansas will be involved in getting that information out. So you'll have an opportunity to learn more about Risk Rating 2.0. But if you're interested in reading about it, there is that link there, Risk Rating 2.0, Equity in Action. And I would highly encourage everyone on here to just go out and read through it. It's a pretty simple read. There are also some download links for some of the technical information if you're interested on how they're developing the rates. But there's also what's called a state profile out there, the file out there, that does have all the details on how the policies in Kansas are going to be impacted. And for the most part, it's fairly favorable, being that they will either save money or have a minimal increase. So we'll move on here to how to file a flood insurance claim. And I apologize for the text-heavy slides, but that's just the ones that FEMA provides me. So it's a little boring or uninteresting, but we'll just start from the beginning here. So the first step is to report the loss to the insurance agent or insurance carrier. So they certainly don't come directly to FEMA. Or there's also some different FEMA numbers out there, disaster assistance and that sort of thing. They must go through their insurance company. And after they report that, just like in property and casualty or an auto claim, an adjuster is assigned. So the adjuster goes out and inspects the property. They'll discuss an advance payment. Those are getting more common. And then issue an estimate. And so this estimate can also be called, is associated with a proof of loss. And so the goal is for the adjuster to issue the estimate and then have the insured sign that proof of loss. They have up to 60 days to sign that, to agree. And hopefully it's a smooth process. And so in the step 3 there, they work together and they agree on a settlement, and then they pay the claim. So if the insured and adjuster are unable to agree, then the claim should be discussed with the adjuster's supervisor. They have to be careful not to skip parts of the process or escalate it. because many times when they do skip something, whoever's a level below that kind of stops talking about the claim, and it can become frustrating for the insured. So we do ask that they speak with the adjuster's supervisor. And then if an agreement still cannot be reached, they contact the insurance carrier's claim examiner. Now, this can be a little bit confusing on who the claim examiner is. So typically flood adjusters are contracted. And so they're not employees of the insurance companies. And so the adjuster works for a contractor, or he or she is a contractor. And then there's a contracting company, and that's usually who the supervisor works for. And then there's a claim examiner who typically works directly for the insurance company. And so it is a different party that can take a look at the claim and maybe come up with something different. And they are experts as far as the NFIP claims. If an agreement still can't be met with the examiner, then the examiner will ask for the proof of loss with the documentation on the amount they're requesting. Why are they typically, it's a higher dollar amount, but why are they asking for that higher dollar amount? And so finally, the insurer will either issue a check for the amount requested, or if they disagree, they'll issue that lower amount. And then if the insured still disagrees, they can submit a formal appeal to FEMA within 60 days, or they can also opt to file a lawsuit.
Quick question, Chris.
Yes, sir.
Going through this process, discussing with the supervisor and the examiner, what is the deadline for the property owner to actually have this proof of loss filed?
Yeah, it's 60 days, and there are there's flexibility in that. If there was, if they're unable to get out to the property, or if it took a while to get an inspection and that kind of thing, the adjuster or the examiner can request waivers from FEMA. But typically 60 days from the date of loss, they need to have something signed, or they try to get things signed and wrapped up to some sort of settlement, even if it's an undisputed amount.
And if they miss that deadline?
If they miss that deadline, they can talk to their adjuster and ask for waivers. They'll probably be asked to submit reasons why, and there needs to be some sort of reason, like I talked about, where they weren't able to get to the property, or perhaps they're ill. Maybe there was a death in the family, or something like that. Extenuating circumstances. All right, so if they do choose to go through the FEMA claim appeal process, which we actually recommend before they take legal action, this is the process to do that. So they send the required documentation, the denial letter, declarations page, contact information, all the usual. If they have a general adjuster or a private adjuster that they're using, a letter of representation. And then, of course, documentation of why they're disputing the claim and why they feel they deserve more of a payment. They can send that to this address, or more commonly, and so there's an easier paper trail, we ask them to email it. And so what happens is that FEMA acknowledges the receipt in writing. They issue a formal letter, and then they review it, and then they respond. And then that's really the end of the appeal process, and the end of the NFIP and the insured speaking. And then they do still have the option of going to court and getting a lawyer involved if they still dispute it. Okay, so we'll move on to coverages, limitations, and exclusions. So there are 3 policy forms under the NFIP. There's the dwelling form, the general property form, and the residential condominium building association policy, what we call an RCBAP for short. So the dwelling form provides coverage for 1 to 4 family dwellings, so all of your houses. But it also provides coverage for townhouse and row houses, and then some mobile homes, which we'll get into the details on that in a minute. The general property form covers non-condominium residential buildings. These are often assisted living facilities, dormitories, or apartments. And then it covers non-residential buildings as well, which are commercial properties or agricultural or schools or churches or something like that. And then you have your residential condominium building association policy. We don't have too many of these in Kansas, but we do have a few. So condominium buildings with 75% or more residential. And so they can't be those commercial condominiums. Those are covered under the general property. And they are issued on to associations. So there needs to be an association that kind of oversees. It's not like an apartment complex with just tenants. So available under the dwelling or general property form, we always like to mention the preferred risk policy. If you haven't heard of this, these are policies available in BCX, A99, and AR zones. And there is some loss history there. I won't go through that in too much detail, just because we don't have too many properties that are affected in Kansas that have multiple flood losses or severe flood losses. So most properties are eligible, but they are rather inexpensive, usually between $300 to $700 annually for residential ones. And so we do recommend those even in those low risk areas. So going through the types of coverages, there are 4 types of coverages under the NFIP policy. There's the building coverage, personal property or contents coverage. There's some other coverage, which we have detailed slides on that. And then there's the increased cost of compliance. So talking about eligibility, a building has to be walled and roofed, affixed to a permanent site, and principally above ground level, about over 50% above ground level, which most buildings are. Walled and roof, that's pretty straightforward. There are some exceptions to that. 2 walls and roof is actually the way it's technically written. So pole barns that we see sometimes in Kansas are insurable as well. And so I guess this is the slide that I just talked about. So 2 or more outside rigid walls, fully secured roof affixed to a permanent site, resist flotation, and at least 51% above ground level. And then manufactured mobile homes are also eligible for coverage under the NFIP. They too must be affixed to a permanent foundation, and that can be lag bolts to a foundation or over-the-top ties. No weight can be supported by the wheels or axles, so they either need to remove the wheels or sometimes they let the tire pressure out of there, but it needs to be supported by the foundation. And buildings in the course of construction, we do get this question quite a bit. Oftentimes, insureds will need a policy in order to get a loan, and then agents are confused and don't write a policy because there's no building there. But the NFIP does allow them to write a policy in the course of construction or just based on construction drawings. And just some details here. If they do that, the construction can't be halted for more than 90 days. And the lowest floor must be above the base flood elevation, or the building must be in compliance. Or if you have a freeboard, it still just has to be above the BFE. And those building deductibles are doubled until it is walled and roofed. So talking about a single building or what makes a building, Of course, a standalone square rectangle building is considered a single building, but then these also are considered single buildings as well. So if they are connected by a wall, a stairway, an elevated walkway, or a roof, they can be considered one building. Now, the caveat to this is that if they are separately titled, or the insured wants more coverage or coverage on each unit, they can be considered separate units as well. But if they're trying to save money on the fees and one policy covers both of them, then they can write the two units on one policy. Then detached garages, we certainly often get this one with the number of agricultural and outbuildings that we have in Kansas here. But the only building covered under the policy, detached building covered under the policy, are detached garages. And the way it works is that they get 10% of the building coverage that is applied to the detached garage. So if you have a policy for $100,000 worth of building coverage, then 10% of that could be used for any damages that happen to the detached garage. And the simple definition that the adjuster uses for a garage is a building that you can drive a car into or has a garage door. So we sometimes get into discrepancies with sheds versus garages. And so we will have questions about that, but as long as it has a garage door and you can drive it's big enough that you can drive a car into it, it typically qualifies. So then going further into detail on coverage A, or building property. And this is just a list of some of the major things that are covered. So all of your building materials, walls and roof, but then also things servicing the building are included in this. So your furnaces and radiators, your any kind of ovens or things that are built into the property, those are also going to be covered. You also have under personal property, these are your portable air conditioners, your carpets, in addition to your belongings, such as your furniture, clothing, beds, anything like that. One of the way that they describe it is if you can pick up a building and turn it upside down and shake it, anything that falls out is covered under coverage B. Anything that stays put is covered under coverage A. Not entirely true, but it's a good way to think about it. And then we get into our beloved basements, which we have all sorts of in Kansas. The definition under the NFIP of a basement is any area of the building below grade on all four sides. So it does not include walkout basements, as we commonly refer them to, but anything below grade on all four sides. It does include any kind of pit, like oil changing pit or elevator pit. And then sometimes hotels will have a swimming pool on the main floor. If that goes below grade on all four sides, it is still considered a basement under the NFIP. And the reason this is important is because there's what's called restricted coverage for basements and enclosures under the NFIP. And so really the only thing covered under coverage A are what we group as machinery equipment or items servicing the building. So your heater, hot water heater, furnaces, that sort of stuff that is typically found in your basement. But none of your finishings are going to be covered. So your drywall, if it's unfinished, will be paid for, but it won't pay to paint it. Certainly if you have any carpet down there or paneling, that stuff's not going to be covered. Tile floors are not covered. And then when we move over to personal property, very few things are covered. The only things are clothes washers and dryers, food freezers, and any food that's in those freezers. So your personal belongings, if you use it for storage, if you do have furniture down there, television, exercise equipment, anything like that, none of that is going to be covered either. So moving on to coverage C. These are just some miscellaneous coverages that are afforded under the policy. This first one we'll talk about is debris. So any kind of debris, whether you own it or someone else owns it, and if it's on your property or somebody else's property, the policy does cover to remove that. Very handy in the event of a major flood. Then you have some loss avoidance measures. This is something that you as floodplain managers might get involved with because typically these questions come up before disaster strikes. So there is up to $1,000 for sandbag supplies and for somebody to go move those out to a property. And then if the insured takes it upon themselves or hires somebody, there's up to $1,000 to move their property to a safer place, be it a storage facility or another building. And this does include coverage for both the truck and the rental facility if needed. And then we'll just briefly go over this. There is coverage for loss assessments on condominium policies. Because condominiums are often have numerous units, the loss assessments can be very costly. And so the policy does cover those. We don't get too many of those in Kansas, but it is a very beneficial thing in the event that a condominium is hit. Talking about pollution damage, $10,000 maximum limit. This is often for residential buildings. It is enough to clean up different areas, but certainly for commercial properties, 10,000 doesn't necessarily cover it. So it's just something that we like to make people aware of in the event that their particular situation is going to come close to that limit. And then going through all of these coverages, these do not exceed the maximum limits of the policy. So in this particular example, they do have $250,000 in building coverage. They spent $15,000 for debris removal. So that doesn't mean they're going to get paid $265,000 on their claim. It is still going to be subtracted from the total building limits or the maximum building limits of $250,000. And then we'll talk about ICC. ICC is $30,000 worth of coverage that's afforded on every flood insurance policy. And what this does is it gives money to the property owner to mitigate their building in some way. And you're probably familiar with these in elevation, relocation, demolition, or floodproofing. And this amount of money can be combined with other aids such as grants, or if there's any local money that's being used, or any at the state level, they can use that. There are two conditions that this can be applied. Substantial damage, which you're probably familiar with, where if the building is damaged greater than 50% of the market value, or the building becomes a repetitive loss, or 2 flood losses in 10 years, or 25% of the market value. And going through what property is not covered, certainly under the NFIP, the concept is that we want to get people back into a safe, habitable, livable space. And so a lot of the things that aren't necessary for that are not going to be covered. So any kind of land, your landscaping, your driveway, any kind of concrete pad, those aren't going to be covered. Any kind of recreational vehicles, those aren't covered as well. And then your decks or walkways or your external things that aren't aren't necessary per se, are not going to be covered either. This sometimes applies mostly to commercial properties, but if things that also aren't covered are exclusions. So loss of revenue or profits if the building is inaccessible or the business has to shut down, loss of access, loss of use, business interruption, and then additional living expenses if the policyholder has to go stay at a hotel or something like that. Those things aren't covered. A lot of discussion around this and providing a lot of interest in providing coverage for those things, but no decision has been made on that. Then this is a slide about sump pumps. So, or discharges that happen in the basement areas. So if you have a backup through a sewer or drain, it's typically not covered. However, if there is a flood in a nearby area that causes that backup or discharge, then that can be covered under the policy. And what we always say is that when in doubt, file your flood insurance claim and have an adjuster come out and make that determination. There's no penalty for filing a claim. There's no charge or cost. They're not going to have their premiums increased. So we always encourage an adjuster to go out there, and the worst thing that can happen is that they'll deny the claim. Now we'll talk about seepage. Seepage is also not covered under the policy. And the bad thing about that is that most of the time it is not covered under a homeowner's policy either. There is no coverage or no policy that I'm aware of that covers seepage, and that's often a pain point for homeowners. And then these next two slides cover what is actually sent to the policyholder. So if they're asking questions or say we never received anything, when they sign up for the policy, these two documents are sent to them. So it's the summary of coverage, and these are also available for download. I didn't include the links, but if you just do an internet search, they usually pop right up. And then they also receive the claims handbook. And so the insureds are required to send these out. And then oftentimes they're supposed to get an acknowledgement form to sign. However, that doesn't always happen, but that's just to show that they've received it and supposedly have read it. So now we'll talk about loss settlement provisions. So under the loss settlement provisions, first of all, we'll talk about deductibles. So the minimum deductibles vary based on different structure types, as well as whether or not they're pre or post firm. But the maximum limits on a non-residential are 50,000, on an RCBAP is 25, and then on a residential is 10,000. So they can't go quite high, and they also get discounts the higher they go on those deductibles. But there are no deductibles taken out in the claims process for those loss avoidance measures for moving your stuff or sandbagging, those loss assessments, or that increased cost of compliance. And so all NFIP claims are settled under replacement cost, actual cash value, or special loss settlement, which we'll go into detail on. So in order to qualify for replacement cost, it only applies to single family dwellings, the building coverage only, and it must be a principal residence, and it has to be insured up to 80% of the replacement cost at the time of loss, or the maximum limits under the NFIP. So the maximum limits for a dwelling are 250,000. And then replacement cost under the RCBAP. Since this is a dwelling, it is also eligible. However, they have to meet that same criteria. So it has to be 80% of the replacement cost value or the max limits, and there's no penalty in the event. And actual cash value, this applies to all other building types. So 2 to 4 family, single family that aren't eligible for replacement cost value. And those single families are often second homes or rental properties in recreational areas like lakes and that kind of thing. This can also be a pain point for when the claim is settled and they don't get that replacement cost because it's not their primary residence. They're often not aware of that. So something we always like to point out. Those other residential buildings are included in this. So apartment buildings, dormitories, assisted living facilities, and then your non-residential buildings as well. So detached garages, any kind of agricultural building, and then mobile homes that are under 16 foot wide and under 600 square feet are only available for actual cash value. And if you're not familiar with what actual cash value means, it mostly means that that the items are depreciated, and so the payment is often less. And then the special loss settlement approach applies to mobile homes that are 16 feet wide and 600 square feet. And the best I can compare this to is under an auto policy. When your vehicle gets totaled, and you can imagine that travel trailers kind of fall into that same boat. But the materials that they're constructed out of often absorb water, and they just don't hold up well in the event of a flood. So so they are eligible for a total loss. The payments on these, there's the building limit of liability, the replacement cost, or 1.5 times of the actual cash value. So whichever is the least of those. And then that is all I had as far as the slides go for today. But I'm happy to take any questions, or if you have a question not related to the material today, we can talk about that as well.
Chris, I put a few questions in the chat and I'll just kind of read them off to you, and that might get some discussion started.
Okay, sure.
Sure. So like, what should a property owner do if community is telling them that they have to haul their flood damaged debris away, but the adjuster hasn't been there to see it yet?
Yeah, that's kind of a difficult decision that they have to make. And that does happen a lot, because especially when the risk is widespread and the adjusters are spread thin. What can happen if they do have the means? They can go ahead and start doing it. They can't get reimbursed for whatever expenses they occur on that. Just document. If they don't have the means to do that, then just try to expedite the claim.
Beyond the debris removal issue, I had a property owner whose claim was denied for his appliances because somebody hauled them off to the metal recycling place for scrap iron because they were shot, but the adjuster hadn't seen them yet. So he didn't have any proof that they had appliances and didn't include appliances in their claim reimbursement.
Very well. Great example. Very important to document. And when at all possible, avoid doing that so that the adjuster can go out there and see it firsthand.
Now, what do you think of this? I think I read this in the flood insurance claims handbook. It said if you're in that situation, to save 1 foot squares of damaged sheetrock and carpet and plastic, take lots of pictures of the stuff. Would that work? Do adjusters accept that?
Yes, absolutely. We also recommend taking, if it's a plate or a VIN sticker or something like that off of your appliances. Any kind of receipts that you may have on those, and any kind of pictures or proof. Try to take the picture or proof while it's in the building and not out in the yard. But yeah, saving those carpet squares or your sheetrock showing water lines and that sort of thing. Definitely a good thing to do.
And had a situation, this goes back more than 10 years ago, rules may have changed, but the adjuster was there, did the adjustment, left, and the next day mold shows up on everything. What happens?
Yeah. It's another issue that's very common and difficult to deal with. So there is that pollution, that $10,000 cap on there. But oftentimes, with the way the claim payment goes and the adjusting process, it is delayed. And so we do encourage people to start being proactive and cleaning that up on their own. And there are oftentimes in widespread disasters, there are some faith-based groups or some different organizations that do provide cleaning supplies for that. If they do have to go out and purchase their own, then they can get reimbursed for that.
Generally speaking, if you got mold on drywall, you're gonna have to tear this whole sheetrock out.
Sure.
You can't just wipe the surface.
Yep. So in the event of that, what we recommend is, of course, take pictures beforehand. And then a lot of times you can hold a ruler up there if you're going to be doing extensive tear out, just to know the line of the damage.
Is it possible to get an adjuster to come back?
Oh, absolutely. Yeah. There's a lot of flexibility in that process. And the issue comes with the time frame and, how many properties are, there's often a limited number of adjusters. So we certainly don't want that to happen too much, just because the adjusters are often spread pretty thin. But if you do need an adjuster to come back out there, that's certainly well within your means to do so.
Had a small town, had minor flooding, but it did flood 5 houses. Small town, they'd all bought their insurance from the same local agent. The agent told all 5 of them they weren't allowed to file a flood insurance claim because it wasn't a presidentially declared disaster. It was a mistake, but I didn't find out about it till nearly a year later. What could we have done?
Yeah, so there is typically that 60-day clause in there that they have to file an insurance claim. There are potentially waivers available. And so what I would have recommended is speaking with the insurance company and see if they could have requested a waiver based on what their insurance agent told them. And then that would have been reviewed by somebody at FEMA headquarters and a decision would have been made.
It's probably better than what I did. I told them to sue the insurance agent. And while we were talking,
yes, definitely that could fall under errors and omissions. I would say ask for that waiver first, and then if that doesn't work out, then they may want to seek legal action.
okay, and we got now a question in chat. See, this discussion is generating some more questions. Do you suggest property owners get a sump pump basement backup addition to their homeowner policy?
Yes. I have that slide on there that talked about when that may be covered under the flood policy or the homeowner's policy. And so if there is a flood in the area and they do get a sewer
Backup
or something like that, then it may be covered. But proving that is rather difficult. So we do encourage them to get that coverage under their homeowner's insurance. Most of the time when we recommend filing a flood claim, it's when they don't have that coverage under their homeowner's policy. And then if their adjuster under their homeowner's policy comes out and won't cover it, then they can file the flood claim. But it's not a very cut and dry or clear flood NFIP flood claim when that happens. So the better way is to cover it under your homeowners if you have the finances and means to do that.
Chris, you may have heard of this deal. It's called COVID-19 that's going on. And they've been doing some remote adjustment. And could you give a brief explanation of how that works in case somebody does get flooded here while the virus is still going on and has to deal with that?
Yeah, sure. that can be used. It's somewhat straightforward in saying that you take the pictures, you send the documentation. Really, it's a communication between the adjuster and the homeowner, often electronically over email, where you send them the information and then you agree on the settlement. And if you can do it that way and there's not a lot of discrepancies or disagreements, then it does go pretty smooth. And that'll probably be the way of the future, if possible, because we can do that on a national level, use adjusters on a national level. But certainly it doesn't work in all cases. And if you have a major flood, a lot of itemizing and that sort of thing, and some disagreements on payments, then you may have to get an adjuster out there to see it in person.
I was in a seminar with adjusters, and one of them said that he would get his clients on an iPhone as a video chat and have them walk around the house and aim the phone at things as he talked to them.
Okay, very well. I haven't heard of them doing that, but yeah, certainly whatever method your adjuster prefers, that can be done. That's a great idea. Okay, did we have anything else? Steve, you might have went on mute.
There's no new questions in the chat right now. I was
Okay.
just looking at it. I do know I had a property owner with a walkout basement with a preferred risk policy outside the floodplain in Zone X who got flooded, and his claim was denied because they said stuff in the walkout basement wasn't covered, even though his walkout basement was finished. And since he wasn't in the floodplain, I would have called his basement his first floor and said it was a diagram 1A and not a crawl space. But we had to fight that, and we lost.
Yep, I've certainly seen cases like that before. Slab on grade versus elevated building with a walkout basement are oftentimes pretty hard to. It's hard to explain, and there's some variations, and you'll see differences in underwriting on those as well. What I would say in that is that they can follow that claim appeal process, and FEMA will have an underwriter or a group of underwriters look at that property and make that determination. So it can be escalated. You still might lose, like in the case that you described, but there are ways to continue to fight it.
Then there's a new question in chat about a summary of what is considered a flood. I think what he's asking for is a definition of a flood, the 2-acre rule, the 2-property rule, and so on.
Yeah, so definition of a flood is 2 or more acres or 2 or more properties of normally dry land. And so we often talk about how it's somewhat difficult to get to the 2 or more acres in certain situations, but the 2 or more properties can really be almost anything. So if a street floods and a building floods, the street is owned by the city and the building is owned by the property owner. So that is 2 or more properties. The other thing is that when in doubt, they can always file that flood insurance claim, and the adjuster will come out and make that decision. So we don't leave it up to the policyholder or the agent to make that decision. So just file a claim and see what happens.
And we've got some questions about CRS discounts. I don't know if that applies to claims at all. And another one about which flood zones require insurance coverage.
Yeah, so which flood zones require insurance coverage? That's an easy one, so we'll talk about that. Yeah, it's really any kind of A zone. So your AE, A1 through 30, AO. If they have a federally backed loan, those will require insurance. You may see more of this, but it can be a business practice. So even if they live in a low risk zone or maybe have a LOMA that removes them from that requirement, banks can still require flood insurance as a business practice just to protect the property and if they are near a source of flooding. So yeah, talking about CRS discounts with risk rating 2.0, there really doesn't look to be any change in how the CRS discounts are applied to the policies. Now, when you get into the details on getting those discounts, there will probably have to be some modifications and changes in those. But as far as the way the insurance policy is rated and how it looks when a CRS discount is applied, there won't be any changes. And if that didn't answer your question, if you could let us know.
Hearing something similar, Chris, but slightly different. You call me on it if I got this wrong.
Okay.
But under the current system, somebody with a preferred risk policy doesn't get a CRS discount. Under risk rating 2.0, it's going to be all policies across the board get the CRS discount because they're all going to be rated under the same rating engine as risk rating 2.0.
Okay. Well, that's something that I'm not able to cover today. But if you in a training session or something like that,
it's not a claims question, is it?
Yeah, you're able to communicate that, Steve.
My fault.
No, it's all right.
All right, I'm not seeing any new questions in chat right now, Chris.
Okay.
And people, you can just take yourself off mute and ask a question as well. You don't have to type it in chat.
Yeah, and I don't know. I should have had a slide in there that had my contact information, but if you need to get in contact with me, I guess you can just reach out to Steve and feel free to give him my email or phone number or whatever if something comes up after the session or just about anything in general.
We sent an email this morning with your presentation on it, and your email address was on the CC line.
Okay.
So everybody has Chris's email address there.
There you go.
Yep. All right. Well, since there aren't any more questions, I want to thank you for doing this for us, Chris, and also for answering all of my kind of pain in the neck questions there about the difficult situations. But people don't ever call me about the easy situations, unfortunately.
I understand, and I'm sure the floodplain managers experience that as well. So, so yeah, that's what we're for.
So thanks